Okay, let's dive right into this explainer. You know, both Lionel Messi and Cristiano Ronaldo realized a pretty brutal truth early on in their careers. Football playing days inevitably end, and the money you make on the pitch absolutely has to keep working for you long after the boots come off. Both of these incredible athletes understood this completely. But as you'll see, their investment philosophies for securing their financial futures are exact opposites. Messi is quiet and highly diversified, leaning heavily on real estate, equity in his soccer club, and tech startups, all heavily managed behind the scenes by his father, Jorge. Ronaldo, on the other hand, is unapologetically visible. He concentrates his wealth into an aggressive portfolio of hotels, gyms, and fragrances under a massive personal brand. So today, we're asking one massive question. Who actually invested better? Now, we are completely stripping away their football identities right now. We're not talking about goals, assists, or Ballon d'Or trophies. We are treating these two global icons strictly as business subjects. We're going to look under the hood of their financial empires and score both of these portfolios exactly like professional investors would, just to see who built the superior, more robust wealth-generating machine.
What's really interesting here is the sheer dichotomy of their philosophies. It's just striking. On one side, we have Messi. His approach is highly diversified and really understated, designed to grow quietly in the background without needing him to actively promote it. On the other side, we have Ronaldo, brand first, aggressive, and incredibly loud. I mean, he quite literally turned his own initials into a highly visible billion-dollar corporate machine that requires his constant presence to thrive. It's a fascinating contrast in how to build wealth at the absolute highest levels of income. And hey, you are definitely going to want to stick around because right around minute 7 of our analysis, we are going to apply rigorous standard investment metrics to both of these portfolios. And honestly, one of these strategies wins much more clearly than you might expect. All right, let's jump into section 1, Messi's quiet fortress. Let's explore Messi's approach, which I like to call a boring but brilliant strategy. His primary focus is parking massive amounts of capital into tangible, appreciating assets that quietly generate yield. The foundation of this is his real estate empire. A massive chunk of his wealth is bundled into a real estate investment trust, or REIT, called Edificio Rostower. Now, a REIT is an incredibly smart institutional-grade financial play because it allows for widespread diversification and consistent dividend payouts without the massive headache of managing individual properties. This specific trust, listed on a Spanish exchange, bundles together boutique hotels, commercial retail spaces, and luxury apartments all across Europe. On top of that, he holds an extensive, high-value portfolio of prime real estate in Barcelona, acquired during his decades with the club. Get this, the estimated value of his REIT entity alone sits at a massive $232 million. But he certainly doesn't stop at traditional real estate in Europe. He holds ultra-luxury properties in the US, like a highly coveted unit in Miami's spectacular Porsche design tower, alongside a massive, sprawling family compound back in Rosario, Argentina. But look, from a pure business perspective, his absolute most genius move was securing an ownership equity stake in Inter Miami. This wasn't just a standard contract. This deal literally revolutionized athlete compensation because it included an unprecedented revenue-sharing agreement with global giants Apple and Adidas. By structuring it this way, Messi became that rare athlete who doesn't just get paid a salary, he actively profits from rising global broadcast subscriptions, merch sales, and the overall billion-dollar valuation of the sports franchise itself. When you map out his estimated $650 million net worth allocation, the strategy is crystal clear. Massive, stable chunks are firmly anchored in physical property and sports team equity. But there is also a very calculated, modern edge to it. He set up a holding company called Playtime, based in Silicon Valley, which essentially acts as his venture capital arm, making strategic investments in sports tech startups and gaming ventures. You'll also find just a tiny, conservative sliver of crypto, reportedly focused heavily on stablecoins rather than volatile, high-risk meme tokens. It is literally a diversified fortress, designed specifically to protect his wealth, generate passive yield, and ensure it grows securely in the background. Moving on to section 2, Ronaldo's brand empire. Now let's pivot to Ronaldo, who operates in a completely different financial universe. He didn't just quietly buy up existing assets. No, he engineered his initials into an aggressive global corporate economy. Looking at his flagship hospitality business, the strategy is incredibly bold. Back in 2015, he entered a 50-50 joint venture with the Pestana Group, putting in roughly 40 million euros. Well, that is now rapidly rolled out into Pestana CR7 hotels in 7 premium global locations, including Lisbon, Madrid, New York, and Riyadh. In the notoriously volatile hospitality industry, leveraging his immense global fame guarantees unusually high baseline occupancy rates. It gives these properties a massive competitive advantage.
And through this rapid expansion and asset appreciation, that initial stake is now estimated to be worth up to 110 million euros. But hotels are really just the ground floor of the CR7 skyscraper. He's scaled his personal brand horizontally across multiple highly profitable industries. We are talking about a highly successful partnership to create CR7 Crunch Fitness gyms, pushing right into the lucrative health and wellness space. He's also got the Inspire hair clinic chain and a digital wellness app called Iraculous. But perhaps most impressively, he aggressively entered the fragrance market. Fragrance licensing is an absolute genius play for someone with his reach. It's a high-margin, low-overhead business model where he licenses his name, collects massive royalties, and the brand partners handle all the manufacturing. He is currently pushing over 2 million bottles a year. Hospitality, health, fitness, lifestyle. It all feeds off the exact same core CR7 brand. And all of this active, relentless brand building has led to a historic financial milestone. Thanks to his unparalleled marketability, his massive partnership with the Saudi Public Investment Fund, and his Al Nassr contract, which alone is potentially worth well over an astonishing $400 million, he has completely broken the financial scale for a team sport athlete. These strategic, high-visibility moves pushed him across the line to become football's very first estimated billionaire. He's currently sitting on an empire valued at an absolutely staggering $1.4 billion. It's a true testament to optimizing personal brand value to the absolute maximum. But wait, we need to pause for a second here, because bigger numbers do not automatically mean smarter investing. The risk profiles underlying these two immense fortunes are fundamentally different, and that changes absolutely everything about how we evaluate which strategy is actually better. You see, the way they've constructed their wealth carries entirely different sets of vulnerabilities. Let's look really closely at Ronaldo's main vulnerability: key person risk. Ronaldo's empire is an absolute financial rocket ship for sure, but it is heavily powered by his 600 million-plus social media following and his ongoing global relevance, meaning his massive portfolio is highly concentrated in himself. Think about it hypothetically. What happens to a lucrative fragrance licensing deal if the athlete experiences a massive PR scandal or simply fades from public memory a decade after retirement? The consumer demand and consequently the revenue could theoretically drop to zero overnight. When your face is the primary marketing engine for the hotels, the gyms, and the apps, your businesses carry an immense amount of localized risk. So we arrive at a classic investor tension: optimize to protect versus optimize to multiply. Messi built a passive, highly diversified fortress. An apartment building he owns in Paris or a retail space in Spain generates steady rent and appreciation, whether Messi is currently trending on social media, injured, or completely retired from the public eye. His asset value is independent of his football fame. It's built to protect his wealth. Ronaldo, on the flip side, built an active, high-ceiling brand designed to aggressively multiply his wealth by constantly leveraging his fame and staying squarely in the spotlight. All right, we've reached minute 7. Section 3, the investor scorecard. We promised this deep dive, so let's run both portfolios through rigorous, real-world investment metrics. When we look at return on investment and raw growth potential, Ronaldo easily takes the win. His active brand building and massive licensing deals have compounded his wealth aggressively past that billion-dollar mark. Another key metric is liquidity. Here again, Ronaldo has an edge. His royalty-based licensing deals and massive commercial contracts provide much faster liquid cash flow compared to Messi's wealth, which is heavily locked up in illiquid physical real estate. But when we shift to diversification and post-retirement resilience, Messi unequivocally takes the crown. By relying on widespread passive assets and hard equity rather than ongoing personal fame, Messi's portfolio is practically immune to the inevitable fading of a sports star's public profile. So the honest answer to who invested better relies entirely on what you are optimizing for. If you want the richer, higher-ceiling business empire, Ronaldo's your blueprint. He took a massive swing and connected globally. But if you want the fundamentally safer, sleep-well-at-night portfolio, Messi is the clear winner. He built a self-sustaining financial fortress.
Let's look at Section 4, Wealth Management Lessons.
Taking a step back from the football pitch, it's fascinating to look at what professional wealth managers actually advise high-earning individuals to do in these situations. There's a very common psychological trap that professional athletes fall into, believing their peak earning years will last forever. Because of this, advisors universally warn against the exact thing Ronaldo did so successfully. They strongly caution against tying your entire net worth to your own name, image, and physical health. Instead, they preach the Messi model. They advise that boring assets like commercial real estate, REITs, and index funds survive bad years, injuries, and recessions.
The ultimate goal is to build diversified income streams that outlast you, income that continually flows into your bank account without requiring you to keep showing up to work. So, as an investor, looking at these two incredible financial blueprints, which strategy makes more sense to you? If you had to put your own financial future on the line, choosing between the aggressive, brand-driven yield of Cristiano Ronaldo or the passive, deeply diversified security of Lionel Messi, which of these two portfolios would you rather own, and why? The fundamental question you have to ask yourself is, are you building a loud empire or a quiet fortress?